Hello, hello, and welcome back to the podcast. Thank you very much for being here. I appreciate it. All right, today we are going to talk about collateral assignments. And this is apparently, I think it's going to become a thing again. With interest rates being as high as they are, I do believe, I don't know for certain, but I do believe that we probably saw more of this going on in the 80s and 90s than we have seen probably in the last decade when interest rates have been really, really low. And so what a collateral assignment is you can go to the bank and you can take your life insurance policy in and say, I'm going to use this as collateral to a loan. And if I do that, I expect a prime rate. So maybe 1.5% lower than what it would be if you used property as collateral. Banks are also doing this right now with CDs, which I find very interesting. Because if you read Nelson's book, Becoming Your Own Banker, you are going to see, I believe it's on page 45, the twin sister example, where one bought a CD and one bought a whole life insurance policy. And what happened in the 80s is we would put our money into a CD, and then we would use that CD as collateral to the loan. And you don't get access to it then. So what happens when we use, a lot of people are talking about using their policies for collateral assignment. So, I want to buy some real estate. And they were actually doing this probably more when interest rates were low. But I think people are going to have to get creative when interest rates are higher. And so we may even see more of it. But when interest rates were low too, we went and we used our policy as collateral, because we then, we got to buy more property, and especially with rental properties, we got to buy more rental properties. On the farming side of things, we see that when farmers are either upside down and they can't pay back all of operating, or inputs like last year, 2022, inputs went up. And so now we need that life insurance as collateral assignment, because that is that's a collateral for our operating note. And here's my thing we have to think about. I do not like it when people use their whole life as collateral assignment. If you are going to use life insurance for collateral assignment, go buy yourself a term insurance policy that's really inexpensive, because there's no cash value associated with it. And the insurance company doesn't care about the cash value. They care about the death benefit. Okay? Or the bank, I'm sorry. The bank does not care about the cash value. They care about the death benefit. But what happens when you use your whole life policy, they now have say of what happens to the cash value. Because if you take a loan, that lowers your death benefit. And that's what is collateral to your loan. So do you really want to invite the bank into bed with you? Because essentially that's what you just did. You said, crawl on in, it's cozy in here, right? And now when you want to kick them out, you also have to have them sign off on that. And they have to release the collateral assignment. Well, right now on the farming side of things, it is kind of a you-know-what show. Yeah, a bleep bleep show. Because tractors are getting paid off. They're not releasing collateral. Land is getting paid off. They're not releasing collateral. They're taking more collateral for things than they need. They're undervaluing. I had somebody the other day. They're valuing their cattle at 50%. So if we're going to value real estate at less than it's worth, that's alarming. We should be concerned. Why are the banks doing that? What do they know that we don't know? But if they are not releasing things from collateral, that is also very alarming. That is control, people. And why do we do infinite banking? Liquidity, control, guarantees, right? Basically those three things. Control. We have control of that loan. If we've given them our policy as a collateral assignment, they can tell us that we can't take cash value. They have to sign off on a loan. We lose control of that policy. Really? Do we want to? How about you just go get some term insurance? I had some recent clients that they bought a business and they wanted their whole life policies as collateral assignment. I said, no, let's just do some really inexpensive term and you use that. The whole life remains yours, so you can use it at will without question. Nobody has control of that. That is the point of what Nelson is teaching with infinite banking. Okay. The same thing happens with a CD. When you put money into a CD, let's say you put $100,000 into the CD, they're going to use that CD as collateral. But if you've paid your loan down to $50,000, they still have control of a $100,000 CD. You don't get access to the other 50. If the time was up, you're still not going to get access to that $50,000. Where in life and in the cash value, we have the same strategy going on. They're using your cash value as collateral, except you keep control. Every payment you make goes back in and is released from collateral. So if you make a $5,000 payment, you have access to $5,000 in 10 days, and we get to use that again. And with a CD, the bank is getting the dividend. They're making the profit. You don't get a share of that profit. And so read Nelson's book. Go back to page 45. It's crazy to me when we're talking about this today in 2023, we are talking about CDs again. I haven't heard the word CD in years. Young people, millennials, don't even know what a CD is. And now the bank is telling us to do that for collateral. So as this comes back into conversation, I'm saying, hey, did you see that in Nelson's book? To people that have read Nelson's book. And they said, oh, no, I didn't see that. You didn't see the twin sister example. So what if we're not paying attention to it because we think it's out of sight, out of mind? Or in fact, the strategy is back because interest rates are so high and they're saying, hey, if you use that CD, we'll give you a lower interest rate. Just like if you allow us to use your policy, we'll give you a lower interest rate. Well, you can give me a prime rate, but you're not going to take access to my cash value. There are a lot of people, there is a whole big trend of people doing this with premium finance as well. Oh, well, you just borrow money from the bank and then the bank uses your policy as collateral assignment in case something happens to you. Well, that is not infinite banking. Infinite banking is get away from the banking system. Don't use the policy for banking. And ironically, you guys, I saw this and I think I've already said something on my podcast about this, but there was this chick on TikTok who was saying that become your own bank. This is the words she used. Become your own bank is universal life, where you can borrow against the policy. Infinite banking is taking your policy to the bank and using it as collateral, aka collateral assignment. That, my friends, is what people think infinite banking is. Little did this chick know, Become Your Own Banker was written by R. Nelson Nash for the infinite banking concept. It's the same thing. Yes, I helped her by educating her and then she blocked me. So not teachable, but those are the things that you guys have to put up with, and I apologize for that. I apologize for the misrepresentation. I try very, very hard to be here to teach you these things so that when people and agents come at you, you can discern the truth and the facts from the fiction. And I am sort of a fact-based girl. Sorry. I have been screwed over a time or two. I'm not going to do that to somebody else, and I don't think that you should do. You should be the one on the receiving end of that because you don't know where to go to get correct information. And that stinks, because where do you go? Why would you believe me over anybody else? Well, I'm just telling you facts, my friends. All I'm doing is trying to teach you. And so with the collateral assignment, some banks have more control than other banks, okay? If you are going to do that with your whole life policy, please make sure you read the fine print. If you are my client, I am most likely going to suggest, if I can, and if I know about it before you do it, I am going to suggest that we do a term insurance policy and you use that for collateral assignment. If you go to the bank, they will even do what's called credit life. Credit life is just really inexpensive life insurance with the bank that you don't even have to go through underwriting for most of the time. So look at that option as well. There are lots of things that can be done outside of using your whole life. But remember, infinite banking is liquidity, control, and guarantees. That is why we do it. And I could add a fourth, uninterrupted compound interest and dividends. Hope that helps. Let me know if you have any questions, comments, concerns. MaryJo@withoutthebank.com. And I will see you in the next podcast. Have a good one.